right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. We got a great show lined up for you today. Today, of course, episode number 457, entitled The Bitcoin Halving Effect. Wow, it's been a big week for Bitcoin. I've been watching the currency throughout the week, of course, as I normally do, not just for my own holdings, but also for our members, because we track and follow Bitcoin, of course, for our members here at followthemoney.com. And wow, I mean, yesterday morning, I'm recording this now on Wednesday, the 28th of February, and yesterday morning I woke up and I saw that Bitcoin was on a tear, rose from like $53,000 all the way up to 57 or so. And then when I woke up this morning on Wednesday, I saw the price of Bitcoin was at 60,000. And now as I'm recording this, I see the price is closing in on, it's a little more than $62,000. So we've really had quite a run over the last several days. Now, today, we're really not going to analyze too much about the recent price action. I think most of that is coming from the excitement around the recent approval of the spot Bitcoin ETFs, which, by the way, have had some record-setting days here. In fact, we'll talk about that a little bit. But then the other thing that people are getting excited about is something known as the Bitcoin halving. And that's something that we've been telling our members about here at Follow the Money for many years, but I don't believe we've ever done a podcast episode on it. So with the Bitcoin halving event, just a little less than or a little more than a month away, we think it's appropriate to dive into that topic and consider the implications of the halving, and also talk about, what it means and how it works and why there is a halving. So we're going to really just kind of break it apart, do a Bitcoin halving 101 podcast episode today. So I sure hope you enjoy it. Kick back, get ready for a nice explanation of how Bitcoin works, how mining works, and then specifically why the halving and why it's so important. Without further ado, let's get started. Well, the Bitcoin bull market of 2024 is really heating up, and we've seen the price, as we mentioned, rise pretty dramatically over the last few weeks. Bitcoin, and not just Bitcoin, Ethereum as well, both having really great starts to this year. This not really a surprise. This was a market that we had told our members that we expected good things from in 2024, especially when you consider the 4-year cycle that Bitcoin has been displaying since the advent of Bitcoin many years ago. So today, what we're going to do, as we had mentioned, is we're going to go through and talk about the halving. And I'm sure you've heard the word. Maybe many of you are familiar with what it is by now, but I know some of you aren't. And so this is really meant to be an educational and informational broadcast to kind of bring you up to speed, to help you understand what's going on, because you're going to hear a lot more about the halving in the coming weeks. And and there's probably going to be a lot of misinformation around it, obviously. We typically see that a lot. But hopefully, this broadcast will give you a really good, firm grasp of what it all means and why it's important and all of that. But let's begin by talking about the recent spot Bitcoin ETFs, which were recently approved very begrudgingly by the SEC. And the spot Bitcoin ETFs have really been showing some, real strength, relative strength. They've really been attractive, I think, to many people who have been hesitant to get into Bitcoin. But now it's an easy on-ramp to be able to buy Bitcoin through the wrapper of an ETF, which is very familiar to many traditional retail investors, as well as institutional investors, many of which have been prohibited from entering the Bitcoin market because it's been a kind of a gray area for the institutional investment world. But with the advent of ETFs now, it makes it much simpler and legal, quite frankly, for many of the the various institutions to be able to buy, and retail who maybe have been sitting on the side watching it all, but weren't sure exactly how to go about buying it. How do you secure it? How do you store it? Is it safe? They hear about hacking online and whatnot, and they may be worried, and it's understandable. So the ETF providing a very simple, on-ramp for average investors and even institutional investors. And when we break apart and we see how the net inflows have been into Bitcoin, we've really seen some big stuff earlier this week, I believe it was on Monday, this is according to Bloomberg, the new nine Bitcoin ETFs broke an all-time volume record with $2.4 billion, which actually beat day one of the Bitcoin when they first became available. And it's about double their recent daily average. And it's in particular the iShares Bitcoin ETF, IBIT is the ticker. That one has really become the big winner. Not surprising, that's the BlackRock ETF. And in full disclosure, we did buy a little bit of that particular ETF when it first came out because we wanted to see how these ETFs perform. I tend to do that, especially with these new products. I'll put my money out there, just a little small amount, just to see how it works in comparison, for example, to Bitcoin proper, to see how they compare. And so far, I've been fairly impressed with how the spot Bitcoin ETF has been tracking the price of Bitcoin. They're not perfect, but it's pretty close, and so I think that's a pretty interesting development. And so anyway, the buying apparently is speeding up. It's not slowing down. And when you look at the net inflows, BlackRock's the big winner. Fidelity is coming in second with its ETF, FBTC is the ticker. We actually track that one in our ETF leaderboard here for our members. It's been up in the top 10, for a little bit now out of the 150 different ETFs we track. Also, the ARK 21 shares run by Kathy Wood and her firm, that's coming in number 3, Bitwise, the fourth most popular one. And then, of course, Grayscale's ETF is really down as far as net flows. Many people fled the GBTC ETF, that's the Grayscale, because its fees were so high, 2.5% versus, you can buy the BlackRock or the Fidelity ETF and get exposure to Bitcoin much cheaper than through that Grayscale. So we've seen a pretty big exodus from the high expense ratio Bitcoin, blockchain, all these different ETFs that existed prior to the spot ETF approval. And now we're seeing a migration of capital over to these low-cost spot Bitcoin ETFs. Makes total sense. But interestingly, Bloomberg analysts are now predicting, there was a report that was put out yesterday that shows that Bloomberg analysts who've really been spot on this stuff. I mean, they've really been tracking the spot Bitcoin ETFs. They've done really good coverage of it and were quite frankly very accurate as to the approval date of the spot Bitcoin ETFs. And they just put out a report yesterday that suggested that spot Bitcoin ETFs could surpass spot gold ETFs in total assets under management in less than 2 years. Here's a quote from the report. It says, Bitcoin ETFs, though barely 6 weeks old, have taken in over $8 billion more than their gold peers, already have 40% as much in assets under management, and could pass them in size in less than 2 years. Now, that's really something. In fact, we've talked about that before. When the very first spot physical gold ETF came out back in, what I would say was 2004, it was BlackRock, iShares, that unveiled that very first spot physical gold ETF. And prior to that time, many people didn't know specifically how to buy gold. I mean, there might be a commercial on TV occasionally, but there really just wasn't really clear. Do you go to the pawn shop? How do you buy gold? How do you buy a bar of gold? Well, it wasn't real clear. And so for the average person, when they found out, well, hey, I can buy gold and get exposure to it through a spot ETF and get exposure to the price of the underlying physical gold, well, then, it was pretty interesting. And so people, kind of moved towards that. And it was a pretty big deal. And if you look at the price of gold in the wake of that spot physical gold ETF put out by BlackRock, ticker symbol IAU, you'll see that it kicked off a pretty strong bull market or rally in gold. So you had a new on-ramp for people to actually buy gold physically. So you had, the typical investment demand from the large banks and the central banks and all of this, and then of course the institutional investors. But for the retail investor, it was much easier now to get access to gold. And because gold does have a limited supply, well, when you cause demand to go up by creating new on-ramps to buy it, well, it drove the price up. And so it meant good things for, the price of gold over time. And we believe that's what's happening here with Bitcoin, that as you create these new on-ramps for more people to be able to get into Bitcoin, well, you have a finite supply. We're going to talk a bit more about that in a minute, but you have a finite supply of Bitcoin. So as you begin to see more people come in and you create more on-ramps for people to buy it, and then you have a finite limited supply of Bitcoin, which is going to be cut in half, by the way, as far as the natural inflation rate coming up with the halving. We'll talk about that in a minute. It's just a recipe for higher prices, and that's exactly what we're seeing. So, and by the way, it's not just Bitcoin, by the way, just really quick. We do expect this year also to see a new spot Ethereum ETF. 9 or 10 firms have already filed a spot Ethereum ETF application. The SEC has a May deadline to approve or reject. We expect that they will either approve all of them or reject all of them. But we do expect an ETF approval on a spot Ethereum ETF by the end of 2024. So that's also going to be bullish for Ethereum in our opinion. But let's move now into the Bitcoin halving. I want to talk specifically about this upcoming halving event. Let's talk about it on the other side of this break. Hold tight.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to one of the longest running personal finance podcasts on the internet. My name is Jerry Robinson. Great to have you here. Follow the Money Radio. You can find us online at followthemoney.com. Not only do we have tons of free resources, but we also have a vast membership area where you can become a member and learn all kinds of great things about trading and investing. Not just about stocks and real estate and ETFs, but also about cryptocurrencies like Bitcoin, which we've been talking about right here on this broadcast for over a decade. Now, today what we're going to do is we're going to break apart the idea of this Bitcoin halving, and we're talking about the upcoming Bitcoin halving event. Now, as we prepare to lay this out, what I want to do is I just want to do a brief introduction to Bitcoin for those who may not be familiar with, literally what it's about and how it's finite and how it's secured. So let's just talk real quickly and provide an introduction to Bitcoin. So obviously, it was conceived in the aftermath of the 2008 financial crisis. We saw Bitcoin emerge, and it challenged the status quo of the financial system. Now, it's now the world's largest and first decentralized digital currency. It was created by someone, we don't really know who it is, it's pseudonym Satoshi Nakamoto, and he or she, I guess, we don't know who it is, but they introduced Bitcoin as not just a new kind of currency, but as the first decentralized digital currency, right? No central authority to dictate its flow. And it promised an era of financial transparency, which was something very greatly lacking, of course, in the current global economy. But what really sets Bitcoin apart is the groundbreaking technology that it's built upon, and that is the blockchain. The blockchain, many people get kind of confused about what blockchain means, but really, it's just a public ledger. In this case, it's a public ledger in the case of Bitcoin because it's a public blockchain. And it meticulously records every single transaction in a secure and transparent manner. And it's a radical shift, really, when we think about how we typically approach and handle money in our current era. It's really a technological marvel, quite frankly, and it's really unusual the way that it has been structured, and it provides all of the ability to conduct a transaction without the need for a third party. So it's really a currency without a government. Now, you may wonder, how do you go about getting Bitcoin? Well, you can certainly buy it. You can go buy it from Coinbase. You can buy it from a cryptocurrency exchange. You can even buy it in the form now of a spot Bitcoin ETF, although you don't actually hold it. But the way that new Bitcoin come into existence is through the world of Bitcoin mining. So miners around the world all compete with their computing power to solve complex mathematical problems. And that contributes to the network security. And they're rewarded for their efforts and their computing power with newly minted Bitcoins. And this is where you have to understand the finite nature of the supply of Bitcoin. Bitcoin was designed with a predetermined limit of 21 million coins. Now, that is a scarce asset in terms of most things. I mean, when you think about units of stocks, for example, many stocks that trade on the stock exchange here in the United States have billions of shares, right? Some of them have hundreds of millions of shares. So 21 million of something is actually pretty small. And what it really did was kind of set the stage for an intriguing economic experiment. So now when we think about Bitcoin mining, we realize that Bitcoin miners are using their computing power to solve these complex mathematical problems or puzzles. And what that does, in the process of doing that, what they're doing is they're validating the transactions and they are verifying them. And then they are solving these puzzles and adding the transactions to the blockchain. So you can really think about Bitcoin miners as, we might call them auditors. We might refer to them as auditors. They're auditing and securing the Bitcoin network. And in exchange for doing that, obviously they have to have some sort of incentive to validate transactions, solve the underlying mathematical problem and puzzles, and then add the block to the blockchain. Well, they need to be rewarded for that. And they are. They're rewarded in the form of new Bitcoin. So that's the lure of mining, is the mining rewards. And so for every block that's added to the blockchain, in the Bitcoin blockchain, miners are rewarded with new Bitcoins. And this system basically introduces new Bitcoins into circulation, but it motivates those who have computing power to secure the network, keep it secure, keep it audited, verify the transactions, build out the blockchain in exchange for these rewards. So, this is really what Bitcoin mining is all about. And of course, that finite supply of 21 million Bitcoins are secured by that, what we call a proof of work protocol, right? So anyway, so we have 21 million Bitcoin that will ever be produced. And in the way Bitcoin's protocol is set up is it targets a 10-minute block interval. So every 10 minutes, you have these new Bitcoin being dispensed to the miners in exchange for their work on the blockchain, right? They're verifying the transactions, they're solving the mathematical puzzles, and they're adding the transactions to the blockchain, right? So this is kind of where we get into the halving aspect. What do we mean by halving? Well, we don't mean that Bitcoin itself is going to get cut in half. And we don't mean that the 21 million supply is going to get cut in half. So what's being halved? Well, when we say there's a Bitcoin halving, what we're saying is that the Bitcoin halving is an automatic adjustment that's made based upon the Bitcoin protocol to the reward that miners receive for securing the network. Okay, so the halving is a halving of the miner's reward. So when you go back and you look at a number of Bitcoin that were available for miners every 10 minutes, that number was 50. So back in 2009, if you were mining Bitcoin, well, every 10 minutes, the Bitcoin protocol was putting out 50 new Bitcoins, okay? And then that happened every 10 minutes, okay? But in 2012, the protocol has this built-in mechanism where the mining reward gets automatically halved after every 210,000 blocks are created in the blockchain, okay? And that's roughly, it turns into about 4 years. So it's kind of like a 4-year cycle. And it's all part of Bitcoin's monetary policy. Now, the block reward, the miner's reward, we call it the block reward, the miner's reward, that started at 50, like I said, back in 2009. But it continues to it gets cut in half roughly every 4 years, or every 210,000 blocks that are added to the blockchain. In 2012, the number of Bitcoin that was created every 10 minutes and available for miners for their work was 25. And then in 2016, it got cut in half again. Another 4 years later, it was 12 and a half. And then in 2020, we went through a halving and it got cut in half again. So the miner's reward got cut to 6.25 Bitcoins per every 10 minutes. Now, coming up in April, estimated date, these are estimated, this is an estimated date. We don't know for sure, but right now we're on target for like an April 21st, 2024 halving. That'll be the fourth halving that we've had. The first halving was back on November 28th, 2012. The block height was 210,000. The second halving event happened on July 9th, and it was 2016. And that block height was at 420,000. And then the third halving event happened on May 11th, 2020, and the block height was 630,000. So this fourth halving event is scheduled for the block height at 840,000, which we expect to be around April 21st of this year. Right now, before that halving occurs, right here in the month of February, I'm recording this on February the 28th. So we're maybe 6 or 7 weeks away from the halving. Right now, the block reward, the miner's reward, the block reward, what do you want to call it, is 6.25 coins per block. So every 10 minutes, miners are able to share a total reward of 6.25 Bitcoins. Okay. And when you add that up over the course of the day, that's about 900 per day. So every day, 900 new Bitcoins come into existence and enter circulation. But where they begin is with the miners. And so typically the miners will sell them. They're usually selling them to fund their operations and whatnot. They keep some of them, of course, but they also sell them because that's how they make money. And so right now, every day before this next halving, 900 new Bitcoin are coming online and are entering circulation. Okay. Now that number is going to get cut in half to 450 per day as soon as we have the 2024 halving, which is going to be in April. What's interesting is when you look and see the demand that's coming in from the spot Bitcoin ETFs, because they have to buy the Bitcoin, within 24 hours after somebody buys the ETF. If they don't have enough Bitcoin to cover it, well, they got to buy it within 24 hours. So when you look at the number of Bitcoins that are being demanded right now in 2024, it's multiples higher than what's being produced on a daily basis. So when you have a tight supply, but a rising demand, well, what does that do? I mean, economics 101 tells you it drives the price up. That's what's happening. That's what's happening right now. Now, if you look at the total number of Bitcoin that are currently in circulation, it's about 19.6 million. Okay. And that means that 93.5% of all total Bitcoin have already been mined. And the current Bitcoin inflation rate right now in 2024, pre-halving, before we hit this next halving, is 1.69%. That's the rate at which the Bitcoins in circulation are growing. But that number is going to get cut in half. That inflation rate after the halving on April 21st-ish of this year is going to reduce the Bitcoin inflation rate to 0.84%. So it'll be less than 1%. That's less than gold's inflation rate, because gold's inflation rate is based upon the new discoveries that are made each year. Now, what's interesting about all of that is that we tend to see prices rally into the halving. And typically you don't see, in fact, going back to the last several halvings, looking at the first, second, and third halving, every single time a new high is not hit until after the halving. So when I'm recording this again today at the very end of February, we're still 6 or 7 weeks out from the halving, and we're already trading at around above 60,000 on Bitcoin. Well, the high for Bitcoin was 69,000. So I mean, we're very close now to hitting a new all-time high. We're probably just less than 15% below the former high. So that could happen before the halving this time. And we don't really know what's going to happen, quite frankly, because we've never been in this situation. All the previous halvings in 2012, 2016, 2020, there was demand for Bitcoin, but there was also a lot of concern, a lot of institutional yawning about it. They weren't really getting involved. Now it's a different story. We have institutions, Larry Fink, who runs BlackRock, he's buying Bitcoin and advertising Bitcoin this time. We got all these different institutions that are making money now off Bitcoin, so they're promoting it. And so now we see Bitcoin really rising. But remember that many people have tried to compare Bitcoin to, say, tulip mania. And they say, well, Bitcoin is just really nothing else except, something that can be created any time of the day. Well, that's just totally different and totally wrong. It's really different from the tulip mania, because tulip mania, you can plant a tulip. Back in Holland, back in what was in the 1700s, they were growing tulips and people were spending tons of money on tulips. But I mean, obviously you think about that. Well, you can grow a tulip. You could put a seed in the ground, There's really no finite nature to the number of tulips that you can grow. Okay. But there is with Bitcoin. It's mathematically set and predetermined that you're only going to have 21 million. And by the way, that number 21 million is not going to be reached until 2140 AD. So that means that, miners are going to be continuing to mine for Bitcoin for, the next 115 years. So they'll be being rewarded for doing this. And so how high is the price going to go? Well, we just did a very interesting and eye-opening video for all of our members where we got in deep and we actually provided some really interesting forecasts based upon the past. And we shared what we expect Bitcoin's price to do. Now, I'm not going to tell you everything that we told our premium members. Now, if you're interested, you can become a member here, followthemoney.com. We've been following Bitcoin, like I said, over a decade. Many of our members bought Bitcoin when it was less than $100. Many of them bought Ethereum when it was less than $50. They knew about it early. And if that's something that you want to continue to monitor, if you're following Bitcoin, if you're following Ethereum and you want good, guidance and charting and commentary and ongoing, ideas, well, you need to come to followthemoney.com because we've been doing that here for many, many, many years. Now, but again, I'm not going to get in and just, tell you everything we told our members, but I am going to tell you this. We believe that the Bitcoin price very likely will continue higher all the way through the majority of 2025. We think the peak will come sometime if the previous patterns hold. And then, of course, we expect it to be followed by a crypto winter, where we have a period of time where Bitcoin then comes back down in price. So this is really going to be something that you don't want to miss the peak on this. You're probably going to want to sell a little bit at least. You may want to hold your Bitcoin for a long time, but there's nothing wrong with taking a little cream off the top, especially when we may have a very big rally ahead. Now, I'll leave you with a couple of things. I hope this has been very instructional and helpful to you about the Bitcoin halving. Remember, the Bitcoin halving is the halving of the miner's reward, and that's the fresh number of Bitcoin that are coming into circulation on a daily basis, every 10 minutes. And so when you slow that supply down and you cut it in half, but the demand doesn't get cut in half, well, then that's a recipe for higher prices, and that's what we expect. Now, our price target on Bitcoin is above $200,000 by the end of 2025. We've been telling you that for a while. And but now let me leave you with our own personal strategy as we bring this to a close. We personally think the best way to invest in Bitcoin is through a dollar cost averaging strategy where you're buying more whenever Bitcoin is lower in price and you're buying less whenever it's higher in price. So we prefer to dollar cost average into Bitcoin, and that's what we've been doing. And we think that's a smart idea for the average investor. Very, very smart idea if you want to own cryptocurrency and if you want to own Bitcoin. That's how we personally do it, and many of our members do. Now, another thing we've talked about before, and I want to stress this, is that we personally allocate 5% of all fresh investment dollars towards crypto assets. 5%. That's a nickel out of every investable dollar. And finally, we also recommend that you be very careful about where you store your Bitcoin. It's a very, very important topic because there are hackers out there, and it's very important that you have a very strategic way to hold your Bitcoin to keep them secure. So these are all the things that we teach our members, and we have courses and videos galore on this topic. So I encourage you to come to followthemoney.com if you want to learn more about Bitcoin investing. It's something we've been doing for some time, and we love talking about it here with our members. You can learn more at followthemoney.com. All right, friends. Well, that brings us to the end of today's program. I sure hope you enjoyed what we talked about today, the Bitcoin halving effect. As we stand on the cusp of this financial frontier, it's clear that Bitcoin and the blockchain technology that undergirds it is not just an experiment, but it's a movement towards a future where transparency and security and scarcity drive the value of money. Now, this journey is not going to be without challenges. It's not going to be without uncertainties, but the potential for this new technology is immense. And as always, I'd like to leave you with a final word. This time, these are the words of Victor Hugo, a visionary who wrote this: "Nothing is more powerful than an idea whose time has come." Bitcoin, with its decentralized approach to currency, is a promise of financial sovereignty, and it's a groundbreaking approach to digital scarcity. And I believe that indeed, it's an idea whose time has come. And these halving events are just milestones on this journey. They're markers of progress in that evolving narrative of digital currency in the 21st century. And that's just something to think about. Thank you for joining me on this journey today. I sure appreciate you being here. And be sure to tell a friend about Follow the Money Radio if you haven't. You can always share this podcast episode online on social media. And if you have any questions, never hesitate to reach out to us. You can find us online at followthemoney.com. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial